Thank you. First and foremost, thank you so much for, I'm going to unmute everybody to make sure I have you guys all live. But thank you guys so much for coming out today and going to your living room or your office and jumping on this live. I truly appreciate it. I cannot thank you enough. Long overdue, but one of the things that was really driving me to put this together was a lot of one-off conversations that I've had with each and every one of you, and just relationships that we've had built in the past. And I felt this was a perfect opportunity for us to get out here and kind of just share what we know, share what we think is happening or is going to happen, and really help people go from their current situation and just make their lives better, whether it be home ownership now or home ownership in the future, but obviously creating wealth through an asset of something like home ownership. So guys, again, thank you so much. So we're gonna go ahead and get started with, I'm just loading my screen here, so please bear with me 1 second. I'm gonna go ahead and just get started with who we are and what we do. You know, again, my name is Lorenzo Murray with Your Home Team at Hunt Real Estate ERA. If you are tuning in here, you're tuning into our live, you're streaming from our live site. Please like and share, comment below, do as you see fit. And I'm going to ask the panel, if you see comments that are popping up, if you get text messages of questions, please do not hesitate to chime in, but please go ahead and like and share, so everybody knows that this is one of many coming down. So again, please like and share. It is on Your Home Team at Real Estate ERA on Facebook Live, and it will be there. And if you can't catch it here, I will make sure that this gets converted into and edited into a YouTube link, and I'll upload it onto Your Home Team East at Hunt Real Estate on YouTube. So providing resources, dismissing myths, closing the gap on some of the home ownership stats that I'm about to share with you in a minute is really the whole purpose of today's meeting. I would like to just kind of start at the top, and again, introduce myself. My name is Lorenzo Murray with Your Home Team at Hunt Real Estate. I'm a part of a team of 8 individuals, and we cover both the capital region and surrounding areas. And then I'm licensed in Massachusetts, so I help focus on homes in the metro Boston area. So the I-495 corridor and heading into the Boston market. And so I got my real estate license about 7 years ago. Just a real quick story about me. I got it 7 years ago. I worked in retail for 17, 18 years. I bought a house. And when I bought the house with my family, my husband, it was it just felt rocky. It did not feel like it should have been the way it did. And once we got the house, I quickly reevaluated. Some things happened. It was just the perfect time for me to switch careers, and it was either now or then or never. So I just said, you know what, let's take the leap of faith, and I never looked back. And so since then, I've helped many people buy and sell homes. It is definitely a passion. I'm obsessed with it. And the people that are on this panel, I think probably are going to share the same sentiment to some degree. So I'm going to pass it off to Alexandria and give her the opportunity to share who she is and her story and go from there. So Alexandria, it's all you.
Hi, my name is Alexandria Carver-Noy. I am a HUD certified program manager at Better Community Neighborhoods located in Schenectady, New York. We service the capital region in aiding potential home buyers assess credit, budget, and affordability, and walking them through the home buying process. We specialize in homeownership, rental development, and affordable housing, and homeowner repairs as well.
Excellent. Thank you, Alexandria. Better Community. She's been beating me up because I'm Better Community Neighborhoods. They just did an acquisition, so They told me they were gonna pull up if I didn't get it right. So
Yes.
thank you. Thank you for joining us. Sean Moody, you're next, sir.
Thank you, Lorenzo. So good afternoon, everyone. My name is Sean Moody. So I'm a credit consultant, basically specializing in helping consumers and small business owners either establish, repair, or maximize credit, both personal credit and business credit. And I'm very privileged and blessed to have been able to help a lot of first-time home buyers who were not initially credit qualified, become credit qualified through coaching and repair. So glad to be here.
Thank you, Sean. I appreciate it. Alex, you're next.
Yes, my name is Alex Pinn. I'm with Northwestern Mutual. I'm a certified financial planner over there. So our role is really to help our clients build their life by design, not by default. So what that means in terms of the home buying process is, we often will meet with clients whose goal is in the next 1 to 2 years they want to buy a house. So we help build a game plan of how to save up for that down payment, talk about what's realistic in terms of size and affordability. And then once they're in that house, how do they now live with this new payment that they have and still doing all the other things that they need to do that we certainly help with, which is, saving for retirement, investing, everything else that comes along with having a big financial burden.
Well said, Alex. I think the other thing is it's amazing how many home buyers we do so much planning, like we're talking about today, to get to the goal of home ownership. And then we get to that closing table and I'll ask the buyer, hey, now that you've busted your butt to get this and you've achieved this goal, what do those what if scenarios look like? What if you lose your job? What if, God forbid something happens to your family and you are now down to one income? What do the plans look like? So you really do need a financial planner, just like you need other people on this call. That's one of the reasons as to why I wanted Alex to join us. So thanks for tuning in. Mel, you're next.
Good morning or good afternoon, everyone. My name is Mel Mayus. I'm a mortgage loan officer with Sunmark Credit Union. Been doing working with mortgages for about 6 years now. Been licensed for about 3. Really built my business on diving into the community and educating the community about how financing works and how obtainable it is to get financing for buying a home. I feel like, this panel here is very strong to have a team. I've really built my brand on also having a team. So there's a point person for every step of the process, and you're kind of looking at the whole team of a transaction right here. So thanks for having me, Lorenzo.
Thanks for joining us, man. I appreciate it. And Rashia, you're next.
So my name is Rashia Turner. I am a partner at Wallace Turner Law. We are a minority women-owned law firm. We do a lot of real estate work, and we know real estate can be a daunting process. It can be a lot of questions and a lot of unknowns. And so one thing we like to pride ourselves in is being available in open lines of communication to make the real estate process as seamless as possible.
Huge, absolutely huge. A team that communicates is a team that's going to get the job done. And listen, there are 2 people on this call. I feel like I'm the last person that should be in contact. I mean, having the attorney, having the lender, those are some key critical positions. Having a planner on board, these are all crazy. So now that we've got that piece, I invited the man, the myth, the legend himself, Mr. Kevin Maxwell. Kevin, go right ahead, introduce yourself, my friend.
Good afternoon, guys. Thanks, Lorenzo, for having me on here. So I'm Kevin Maxwell from Maxwell Home Inspections and the co-owner of Albany Mold. So pretty much I do the home inspection process in terms of, the buying process. So when you're buying a house, you want to make sure you get a home inspection to make sure that the house is everything that you hope it's going to be, and to find out anything that you don't want it to be. And on top of that, we also do the mold process too. So if we ever find like mold or there's any situation like that, we can kind of guide you through that process as well. So thanks for having me.
Thanks, Kevin. So he talks about mold, which we're not going to get into too much today because I think I could do a segment on mold all in and of itself. But I'm glad you keep dropping that word because it's something that is just, I hate to say that it's just common. It's in just about every deal. It just pops up. It shows its ugly head. So it's not something to be scared of. The buying process in and of itself is not something to be afraid of. I think, going back to this team concept, shout out to Claudine. I see she's watching right now. She had posted on her page when she was sharing this, she had said, this is my team. And I was introduced to Claudine by Sean, right? And, she was saying how she had a credit repair person, and now she's working with Alex at Northwestern. I mean, these are things that are just, people are creating teams, because when you have a team, you're leveraging, right? It's one of my favorite words. You're able to leverage and take that pressure of the things that you need to do, put that burden on us, utilize us. That's our task. That's what.
I think we're breaking up.
Out here. And I just want this to kind of be a very loose discussion. I'm going to fall back because I really would like to hear the opinions and thoughts of you. But these are some statistics that are coming from NAR, which is the National Association of Realtors. And these are things that I just kind of want to hear what your thoughts are. So the first thing is the median home sales have crept from an average of $240,000 in 2017 to over $280,000 in 2020. Now that's the entire state. So you've got some areas that, don't have significantly high house values, and then you've got other parts of the state that are $1 million properties. But as a whole, in the course of 3 years, we've seen a $40,000 spike in the average home price. The next stat, inventory has dropped from 65,500 in 2017 of homes listed for sale to 57,800 homes in 2020, as of, I want to say it was the beginning of the year. That's a 10% drop. So here we have prices of homes increasing. We've got inventory decreasing. Here's the piece that is a little bit more puzzling to me. While home ownership continues to rise year over year in the US, the breakdown for the minority communities, and this is not just a Black thing, this is anything that's, non-white, non-Caucasian, the minority communities are not seeing the same ratio of home ownership, right? So the home ownership rate for non-Hispanic white Americans has been consistently above 71% from 2016 to 2019. In the same period, the home ownership rate for Asian Americans has been above 53%. Hispanic Americans, the rate has been held above 45%. And the same period of time, Black Americans has been around 41%. Thoughts?
Well, I would step in first. So I feel like there's a lot of reasons to why that's like that. But one thing I really picked up on over the last year is a lot of times when I'm dealing with a minority first-time home buyer, this is their first time getting educated, speaking to me or speaking to the realtor. They have no education on the process. To whereas the non-minorities, every time I'm on the phone with them, they want to talk to dad real quick. They want to talk to mom because they're already homeowners. So they're kind of a little bit educated on how to obtain financing versus someone who's really stepping foot into a ring that they never stepped foot in before, versus someone who's has generations of people owning homes and has the education of real estate and how to get financing. So I feel like that's one of the things I came across of, and I thought about that this makes sense as to why, a lot of times when I get on the phone with a first-time home buyer who is a minority, they warn me hey, I need my hand in this process.
Well said.
I like to piggyback off that, Mel. You're absolutely right. I do think the number one reason is education. And I do feel that as a HUD certified counselor, it's my job to get into these underserved communities and educate the people. Because when we do that, now they're educated, they're learning a process, they're learning exactly what it's going to take to accomplish the goal.
Yeah.
Yeah, I completely, and I don't think it's just, education on home buying. I think it's financial literacy in general is something that our community is very underserved in. And oftentimes when I meet with clients, they'll say, oh, I didn't know that I could work with a financial advisor if I didn't have tens of thousands of dollars to invest right away, which is a really common misconception and certainly not the case. So I think financial literacy in general is a big reason for those statistics, Lorenzo.
Well said. And anybody else?
Yeah, and I think on top of that too, it's another thing of like fear in terms of like lack of construction knowledge. You know what I mean? Because like a lot of times people think that when it comes to having a house, you're going to consistently need to do repairs, which can somewhat be the case, but it depends on the type of house you're going to buy. So I think that it's like people don't understand that they have condos, there's townhouses. If you don't want to do repairs, you know what I mean? There's just so many different type of houses that you can move into as a buyer. That if you don't want to buy the foreclosure house, that's going to be taking up so much time and all of your resources, then you can buy something else that's less maintenance, But I think people don't really, I don't want to say get that, but I don't think they really think about all the different options they have.
Mm-hmm.
So you just said something that I think, and Alex said something, financial literacy, I think applies no matter who you are, but I think it is definitely, it's definitely clearly by these stats. I mean, these are not these are NAR stats. These are not, numbers that I cooked up. I think the biggest piece is we as a society are trained in general to get the best bargain, right? When we buy a television, we look for the best price. When we buy a car, we know that we're going to go to a dealership and we might have to haggle. When we do anything, when we buy a house, we haggle on price. I mean, that's our mindset. However, oftentimes when that phone rings for the first time and I've got a home buyer who is just saying, hey, listen, I have no idea what to do. They are, Kevin, did we lose Kevin? Yeah, we did. All right, he's coming back. One of the things that I often have to explain to them is, and I tell them when they talk to their lender, they'll go over this with someone like Mel, is don't focus on the purchase price, look at your budget. Alexandra, you and I had a conversation offline about budgeting, right? And just how to create a budget. And so a lot of times we don't even know how to create a budget. Homeowners are, they're adamant. They're like, wow, I see rates are low, but, and I look at this house is $50,000. I can make that work. When in fact, you probably qualify for a house that's $150,000, your payment's going to be great. It's probably going to be the same amount as it was as your current rent. And if you're open to buying a 2-family or a 3-family or a 4-family, that's even more of a way for you to become a landlord, have your own place to live, invest in yourself, and kind of kill more than one bird with one stone. So some of the biggest challenges that have come from that I've looked at these studies, what seems to be the problem? And so I keep seeing the same message across the board, no matter what. Student loans, credit applications being denied, debt to income being too high. So I'd like to just kind of dab into some questions, because I even see somebody on here that asked, what if my credit's okay, which we'll get into. What if my credit's okay, but I don't know the first thing to getting a home ownership? So I had you guys introduce yourselves for a reason and order, because I feel like we should almost go through that process when we are thinking about becoming a homeowner. Partnering with someone that's going to help us with a budget, partner with someone to make sure our credit's okay, partner with someone to make sure that we are financially sound, not just necessarily beforehand, but afterwards. Once you've purchased the home, getting partnered with that lender, talking to your attorney, and having your home inspected. So the first question that I'm going to throw out here is, for any of us to answer. How can you contribute in your current role to future buyers resolving the challenges that I just mentioned above? And feel free, anybody to kind of chime out here. In your current role, based upon we knowing that student loans, credit applications being denied, debt to income being too high, what can you do in your role to help out with that process?
Well, for me, I know my title is a mortgage loan officer, but I also try to look at myself as an advisor, because I want to be able to be that point person throughout the process in terms of, like, for instance, like you said, for example, someone might qualify number-wise for a $300,000 house, but are you comfortable paying $2,500 a month? So having that pinpoint of, all right, what are your limits? Listening to the buyer. Listening is like key for our role, is to hear what your goals are. And I actually learned that from Lorenzo. What's your next 5 years? What's your goals? And that will better help me better advise you. You know, should you be going to two-family? Are you looking to own real estate? If you are, two-family is your best option, first role. And I'll explain that why. So I think that also goes back to the education again, is things to do and not to do throughout the own process to make the process easier. And then having that team, if you have a credit issue, all right, well, I know a guy named Sean Moody that can help you with that piece. Oh, you need an inspection. I know Kevin that can help you with that piece. So I think all around, it's all about kind of listening to what the buyer's needs.
Well said. Anybody else?
I mean, I can talk a little to this, with getting a person prepared to get into a home. At Wallace Turner Law, we do debt collection as well. And we can help people clear up their credit. Sean, I know you run the whole thing, but sometimes it comes that process when, say we're in a judgment phase. We may be able to file some paperwork to vacate judgments, get certain things removed from the credit report and things like that. Because when we're contacting these agencies, I'm not necessarily contacting that collection agent that's calling you. I want to speak to the attorney who's handling the file, because generally there's always an attorney who's handling the file. And if it's not, I want that attorney assigned to it so that we can get people the best deal. Because sometimes when things go to underwriting, when you're settling things for less than full and things like that and trying to get things deleted, underwriting can say, well, why did you do this? Why did you want to do this? And they want explanations and stuff like that. And so we're able to help in situations like that.
Ray, you over here dropping coins already. It's early. So Alexandria, you did that to me last time. Now it's her.
And I want to add, so the difference, so for me, Mel said he's asking what the goals are and what's realistic. And from my perspective, in my position, I'm showing you what's realistic. I'm not asking you, I am showing you. We've come up with a clear budget that is realistic. And listen, the bank, they pre-approved you for 150,000, but based on this budget that we put together, you only really can afford 90,000. And I'm showing you this on paper. We're looking at your credit. If your credit is in dire need, then you have to be referred to the professional. You have to be referred to Moody Blues. You have to be referred to a Rashia to handle the judgment. So I'm asking goals and I'm really assessing. I'm hands-on with the client. So having a counselor on your side is really that initial, giving you the overview and allowing you to get a bird's eye view of your own financial stability.
Well, yeah, and I feel like sometimes you really, in a way, you have to give a buyer a slap of reality. You can't have the marble floors and all this for your first home. You have to, like Alexandria said, stay in that budget. And I can see, just looking at your liabilities, how much you're making versus how much you're paying out. Something might not make sense to me, and I'll be very transparent with my buyer about that. It might not make them happy, but at the end of the day, we're not trying to end up in a recession again for putting people in homes that they can't afford.
Just be like, you're broke. That's the reality. You can't do it, because then we're going to be dealing with a foreclosure. It's not what you want to hear, but it's what you're going to hear.
And then when you go in foreclosure, there's a while you have to wait until you can get another home, another mortgage. So you want to avoid all that.
You guys are hard. You're broke. You can't do it. See,
I'm a realist, and that's why our clients love us and they come back, because that's the reality of it. Granted, I want the money for the closing. I want to get paid, but the reality of it is,
And when you have that broke client, they meet with a counselor and we're able to kind of nurture them and walk them through and get their budget aligned and work on a savings plan, etc.
Right.
So that they're ready and prepared and not coming to a Rashia and a Mel and a Lorenzo and a Kevin and not knowing, right? So we will work with an Alex, with the financial planner, and just make sure that we're aligned.
So I want to jump on that. I've had buyers, and there's a question in here, which all this is important because I had a client about 6 months ago who wanted to come in and buy a house, and her credit was okay. She had, she had a great job. She'd worked there for years. She'd rented the same place. Everything looked good, but when she she didn't have a financial planner. So I put her in touch with Alex, and after looking at some things that they talked about one-off, she came back and said, right now is not the right time. I'd like to save some more for the next year and then come back to you in about a year so that I can go out and take a look at that time. So, having your ducks in a row, there's a question in here that says to talk about loans. All of this is important because if you don't have your ducks in a row before you go to talk into a particular loan, that might be better for you. The reason why I went over the stats first is I want to just point something out here. When you've got inventory on a decline or flat, right? It's not growing. So just so you know, seller's market, buyer's market. A seller's market is when we have less than 6 months of inventory, right? It's supply and demand. Right now, we're sitting at about 2 to 3 months of inventory on hand, okay? 6 months is a healthy market. Anything above 6 months, it's a buyer's market. So we're sitting at a seller's market, which means the sellers are not budging on their prices. Going through this pandemic, sellers are like, I'm not changing my price. Okay, that's fine. So now what's happening is because you have high supply and demand, buyers are going out. They want to go buy 123 Main Street, but 123 Main Street is perfect. It's turnkey, and it's attractive to many buyers. Many buyers. You're the buyer that needs to have your offer is less favorable to the seller and more favorable to you. Well, when you're putting in an offer and that offer is in competition with other deals that are out there, what happens is your offer gets pushed to the side and they go with a stronger buyer. And what I keep hearing here is they say, what do they say? Luck favors the prepared. Is that right? So when you're working with people like us, a team that's going to sit down with you and say, hey, listen, this is the best way for you to be competitive in today's market. It's really listening. Sometimes that conversation isn't going to be as warm and fuzzy as you'd want it to be. Sometimes you just have to have that hard conversation. And, it's imperative because now it's, the days of going in and looking at a house and they want 300,000 and you say, well, I'm gonna offer them 285 just because. That's so 2015. That's not 2020. That's gonna get you laughed out and you're gonna just get frustrated. So doing your due diligence on listening to each and every one of these people within your team to help you get to where you need to be. So let's talk about that for a minute. It's not on the question, but I just want to, Mel, can you just touch upon the different types of loans, FHA, USDA, VA, conventional, just touch upon them if you can as quickly as possible, just so that you have an understanding of what they are.
Yep, so FHA, Federal Housing Authority, they allow 3.5% down payment for the loan. It's really built for your lower credit worthy clients. So you are going to get a better interest rate than if you were to try to go conventional. If you had let's say an average credit score, conventional loan is at 5% down mortgage. The good thing is that they're a little less strict about the appraisal and condition of the property. That does not mean the house can be falling apart and you can get a conventional loan, but they are less strict than what you would see FHA. They allow a 3% seller's concession, which means you can roll 3% of the purchase price into a loan amount. And then FHA allows 6%. So a lot of times, a first-time home buyer, we do push towards FHA just because you can get in for less money. VA is a veteran VA loan. It's a zero money down. That does not mean that you can come to the table with no funds. When you come to the closing table, it's three things: your closing costs, your prepaid items, and your down payment. So with the VA loan, the down payment is gone. So it's less money you have to come to the table with. USDA, same thing, no money down. It's 100% financing, but it is built for your rural area, so its property has to be eligible for the program. But those are your four major loans that you see. There is a home ready conventional loan. It is a 3% down conventional loan. It does have income restrictions though, that they will cap you at depending on where you're buying. I know that was fast, but you said to go as fast.
That's fine. They're going to be able to rewind this as many times as they want on YouTube, and you can always call Mel if you have any questions.
Yes.
I'm not going to talk about the rehab loan. There's something that we're doing at your home team. It's a little bit different that you might have seen elsewhere, but the rehab loan is an important, and I'm going to save that for last when we get to Kevin. So the next question, just for the sake of time, why should I assemble a team to help me buy a home? I think we kind of answered that. It's the more prepared you are, the better off you're going to be when you get out there to become a homeowner. I know that your home team, we sit down with you. We do not even go and look at a house. Now, obviously, because of the pandemic and we want to respect social distancing, we do everything online. So we just sit down with you and walk you through beginning to end, what that looks like from our initial consultation to the day that you get the keys and you're doing your final walkthrough, and where each of the people on this call, this panel, plug in and how they can help you. There are a couple others that are not on here, but all of those steps are absolutely critical. The next step, this question is more geared towards you, Mr. Moody. A couple tips to start tackling potential credit issues, because NAR statistics show that student loans, credit applications being denied, debt to income being too high. What are some pieces of advice that you can kind of drop here today? Now, hold on, before you answer, I just want to point out that last month on Mel's call, you were dropping gold coins like it was nothing.
Making it rain.
All right. So,
I'm just saying, you better bring it.
Yeah. So the first step is really, you don't know where you're going unless you know where you are, right? So you have to check your credit report. I've been preaching this for years. Your credit score, whether you agree with it or not, your credit history is your financial reputation. And I think people are now finding that out, unfortunately, the hard way as we go through this pandemic. And so the first step is to know exactly where you are. Check your credit reports. Annualcreditreport.com, where you typically get your credit reports, access to your credit reports on a yearly basis, is now offering your credit reports on a weekly basis. So there's no excuse not to know where you stand. Now, why would you want to check your credit report? Because again, I said it's your financial reputation. So you want to look for errors. Is your name spelled correctly? Does it have your current address? These things make a difference. Is there an account that shows open that might be closed, or vice versa? Is it a closed account that's showing open? Do you have a medical collection on your report? If you're going for a mortgage, guess what? A medical collection will impact your score. And by the way, 1 in 5 people in this country have a medical collection. And especially if you're in an underserved neighborhood, we were talking about stats earlier with minorities. There was a study showing that 48% of African Americans have what's called a subprime score. And these are families that are making anywhere between $65,000 to $75,000 per year. So again, we have to empower ourselves with the information, and the information's out there. The 5 rules that determine what your credit score is, those rules haven't changed in decades. So there's no reason not to empower yourself with that information. Google it if you have to. But I would share that. Secondly, you want to live within your means. That's Alex's space. But I tell people, look, don't spend money you don't have. Look at your current bills. So as an example, if you've got Netflix and you have Apple Music and you have, your internet wireless, internet service provider, whatever it is, definitely take stock of those monthly bills. Is it a need or is it a necessity? And, even myself personally, I'm calling Spectrum. I'm calling DirecTV, because oftentimes they have these promotions that end in 6 months and your bill goes up $60 or $30 a month, and you have no idea. And these companies have retention departments where, they want to keep your business. So there's ways to do that. And the last thing I chat, I don't have much time, is the CARES Act. Under the CARES Act, if you are struggling to pay your bills as a result of COVID-19, under the CARES Act, as long as you call your lender ahead of time before you actually go late, they're supposed to work out a payment plan with you. And not only that, they're supposed to report you as being current on your credit reports. Now, again, that should be a last resort thing to do. Certainly you want to stay within your budget and pay your bills. But if it does get to that, call your lenders. Be very proactive in calling your lenders.
Thank you, Sean. Well said. Well said. So talking about, budgeting and stepping in the space of financial planning, what are a couple of financial pointers that you have, Alex, to keep in mind when evaluating if you're ready to buy?
Yeah, so I would say there's a few things. Biggest ones that immediately jump to mind are, do you have enough funds already built up to come to closing? Like Mel was mentioning, those 3 things that you need to come to closing with. So do you have enough for not just that maybe 3.5% down, but are you also going to have enough for the closing costs and all the prepaid items? Or are you going to be completely wiping out your entire savings account to get into this house? And now you have nothing, right? So it's not just as simple as Mel told me I'm going to need 10 grand. I have $10,005 in my bank account. I'm good, because you get into that house and you write that check for 10 grand and you have $5 left to your name. What happens a week later when your stove goes out and you need to replace your stove or a major appliance, right? So that's one of the biggest things in evaluating if you're ready, is do you have enough funds? And if you don't, you work with myself or you work with somebody like Alexandria to get a game plan in place as to how do I make sure that I have enough in savings. Figuring out the budget is also really important. Again, myself or Alexandria can help with something like that, where you're renting an apartment for $1,000. Yeah, my mortgage is only going to be $1,200. It doesn't seem like that big of a jump, but what are some of those other expenses that aren't traditional mortgage expenses, but come with owning a house, right? Higher electric bills, higher utilities, all those other things, maintenance costs that you don't typically have with an apartment. And then lastly is, and you mentioned this in the very beginning, Lorenzo, do I have the right types of protection in place? I can't tell you how many homeowners I meet with that don't have life insurance, right? So 2 people go in and buy a house, that payment is based on both of your incomes. And if one of you were to pass away or lose your job or anything like that, how do you make sure that you can still make those payments and not lose your house? So, if you don't have the right types of insurances in place, we can certainly help you and get covered to make sure that once you do accomplish this goal and get into the house, that you're always going to be okay and you and your family can keep it.
You don't want to be house rich, bank account poor. Don't do it. Don't do it. It's the worst thing you could ever do. And I'm going to say this, but not everybody in this game is your friend. And I do mean game. This is a game. We joke about it amongst our team, but this is like chess. It's like chess to get to get to home ownership, and then it really is about strategy. It's just creating strategy constantly. So don't try to do this alone. Well said, Alex. Thank you. Alexandria, I have some money saved, but would love a grant. What are some things that I need to consider?
The number one thing you should consider is the demographics. Where are you looking to purchase a home? That would allow you to narrow down, not demographics, the area, sorry guys. That will narrow down what grants are available to you in the capital region. So there are several areas that offer down payment and closing cost assistance. So if you know where you're looking to purchase, that would better serve you.
Excellent. And I just want to point out that your organization, while you're located in the city of Schenectady, you don't just service the city of Schenectady and Schenectady County. Is that correct?
That is correct. We service the capital region.
Excellent. Excellent. So next question is for you, Mel. My student loans are deferred. Okay. My student loans are deferred, so I'm not paying on those right now. and my credit score is 680. You know, it's not horrible, but it's not, you know, the best. Am I good to go?
That depends. So you can have a credit score of 850 with student loans. The credit score doesn't really matter when it comes to the student loans. FHA requires us to take 1% of the student loan balance, no matter what the credit report reports, no matter if you're paying it or not. We have to take 1%. Conventional, however, if the credit reports that you're paying $25 a month, we're allowed to use that as a monthly debt. If the credit report is showing a $0 payment, then we have to take 1%, just like FHA, and hit you with a monthly debt of whatever that 1% is of your student loan balance.
So I just want to elaborate on this. So what you're saying is if I have a student loan debt of $30,000 and it's deferred,
Yep.
right? And you have to account for 1%. So that's $300 right there, right?
Yep.
I've got a car payment. My car payment is because you guys are looking off my credit report. So my car payment is $300 a month. I'm not talking about my insurance. I'm just talking about my car payment. So now that's $600. And then I got to look at, then you got to look at what else. Let's say I've got 2 credit cards. One's a $10,000 limit, but I've got a $6,000 balance. And I've got another one that's, you know, $2,000 and I've got a, you know, $1,000 balance. All of those things are going to factor into what's called my debt to income. Is that correct?
Correct.
Which
Yep.
is
So
why go ahead.
yeah. So basically how a lender qualifies someone for a mortgage is they use a debt to income ratio. So it's your current monthly debt and your potential housing payment divided into your monthly income. And each loan program has a max or a cap ratio that you can go to, which then tells the lender how much you can borrow. A lot of people think that the balance on your credit report matters, and it really doesn't unless it's the student loan, because what we take into consideration is what you're paying a month. So you can have a $12,000 credit card, and they're like, oh, well, I have a $12,000 credit card. I don't think I can get a mortgage. Well, if you're only paying, let's say, $25 a month or $35 a month on that, that's what we're counting against you, not your actual the balance on the card. So the only balance that really matters, again, is the student loan, because depending on the program, we might have to take 1% if we were to go FHA, and then conventionally 1% if it's not reporting a payment.
Can I just speak to that for 1 second?
Yes,
I'm not going to
please.
speak as an attorney. I'm going to speak to as a person who has more student loan debt than anyone in this message combined. That was like the biggest issue when it came time for my husband and myself to buy a home, because law school is $40,000 a year. That's 3 years. Undergrad was $40,000 a year. So we're talking over $200,000. And I thought we were going to be able to get, you know, a first time, you know, a different type of loan, and they considered 1% of that, and so that was major. So then we had to do the conventional route, which you know, it comes along with its own different things. But I just want to say it is possible. You just might have to be creative in how you do things. But the student loan that was one of the biggest deterrents, and it's frustrating, you know, and it's gonna make you want to quit. You know, but you just got to stick with it, and you just want to speak to a mortgage person who is creative. And I
think that's where the advisory part comes in, because if your payment's deferred and you're going conventional, and I'm like, hey, it would be easier if you paid this payment now. If you were to take it out of deferment, I can get you a lot more money to borrow, because we can then use what it's reporting. If it's deferred and you're not paying it to 2024, and we have to take 1%, it's kind of not fair for the buyer, because now I'm hitting them with a penalty that they don't want to even necessarily be paying for 4 more years. So sometimes I will advise, hey, I think you should take it out of deferment, just so we can see that it's reporting a payment and we can use that payment, because it's going to be less than the 1%. And then after closing, call your servicer and say, hey, I need this deferred, or I need some type of payment plan to where that they go back into that deferment, and that can happen. So that advisory, like we spoke about earlier, and being able to kind of maneuver through the hoops to make sure it works it's kind of like the ultimate goal with our positions.
And
So
can I piggyback off of that, Lorenzo?
Yeah, go right ahead.
So I would like just to add, it's important for our consumers to understand the student debt and how it works. And also, when I'm dealing with a low to moderate income family and their student loans is in deferment, it is suggested that you get on an income-driven repayment plan. So then you can work out something with them that would allow a payment that is affordable for you. So you may not have your standard $494 payment. You may be able to get that down to $125 a month on that plan in order for you to move forward with obtaining a mortgage.
Right. And that $300 difference between your fully amortization payment versus the income base, that $300 can increase your purchasing power significantly. So that's great.
Before I ask you your question, the thing I want to point here is oftentimes, we have gravitated towards doing our shopping. They say the average home buyer shops online 3 to 18 months before they even pick up the phone to call a realtor to say, hey, listen, before I say I want to go look at a home, right? So you just got to figure out where you are between that 3 and 18 month window, okay? To add to that, when they go to say, I want to go see 123 Main Street because that's the house that they're in love with, I've got to get into this house, I've got to see it. If you've got any of these things that are going on and you don't have a team that's identified, that's working out with you and strategizing with you, you could definitely be on an uphill battle and be setting yourself up for heartache because you didn't do your homework up front. And it's not because you didn't want to, you just simply didn't know. So it's all about having that education and making sure that you've got your I's dotted and your T's crossed. It's just, we're not asking you to get pre-qualified or pre-approved or fully underwritten just to do it. It's not
just get your ducks in a row.
I would love to go out here and take you guys out to go see whatever houses you want to go see. But from a code of ethics standpoint, I can't knowingly take you out here to these houses if you don't have your ducks in a row, and that's where that pre-qual comes into play. Are there some people that will do it? Absolutely. But that's not me. That's not how my team operates, not how we operate, and it's not how many of us operate. So we'd rather see you get set up for success, and this is why. Well said. Great insight, guys. Rashia, why is it so important to have an attorney work with me and look out for my best interest? Is this a area, if I'm cutting corners and trimming the fat, even though I'm told that there's not much fat to trim on this, is this a corner that I want to risk trimming and not having you? I mean, what value do you bring to the table here?
Well, it's a requirement, definitely prefer, but the value is because it's a contract. Attorneys, we work in contracts. Me, for one, I love contracts because the language in that contract, it can control every single thing. And it can be so simple as someone saying they're going to leave a washer and a dryer and them leaving the home and taking the washer and dryer when you're getting into it. As attorneys, we help to renegotiate different things. We just had a deal last week when the concession was $11,000 and it was for a VA loan. We had to go back and renegotiate that contract because it had an issue at underwriting. That's, where we come into play. We are working with the loan originators to try to push things to closing. And then when you have a question about certain things, like say you get that $50,000 home and you're paying taxes on the $50,000 home, but you put more money into the home and now it's worth $150,000. But the reality of it is it's probably only worth $100,000, but now they're charging you taxes on $150,000. We can help grieve those taxes and walk you through the process and things like that. And so I would say it's great to have an attorney and someone to, hold your hand and tell you the reality, the reality of it. And, clients come to us kind of once they have the other ducks in a row, but sometimes we really start working when it comes time to have to renegotiate things. Say, a lot of people, they got a pay cut during COVID. My mother-in-law got a 30% pay cut. That doesn't mean she's no longer qualified, but that may mean she wants to lower the purchase price on something. And so we work in conjunction with everyone else.
Well said. Thank you. What the takeaway I get from what you just said is the relationships that we build on the forefront. I tell my buyers and sellers this: once you work with me, you stuck with me. Unless you fire me, we friends. I'm pulling up dinner time. It's not. Oh, I'm just going to help you get through this, and I'm walking away. You've built a relationship, and when we're working together, I'm asking you for that referral. Who do you know that you can put me in touch with that I can help out with. I'm not necessarily looking for someone to buy a house or sell a house today, but I am looking to help people, and I'd rather work by referral than to work off of just cold calling any day. You know, I'll do either. I'm totally fine with that. But at the end of the day, it really comes down to building relationships. Thank you, Rashia. Well said. My last question that I had for Kevin, and this is kind of a complex question, Kevin, so I apologize. I saved this for you, but you know, earlier we were talking about loans and what kind of loans are available. And so we know that there is a rehab loan, right? There's a conventional version of rehab. There's the FHA version of rehab. And so I'm right now dealing with not one, not two, not three, but 4 different clients with 4 different rehab loans right now, right? They are interesting, not the clients. I love my clients, but the loans are no joke. You know, the traditional home sale usually takes between, you know, on the low 30 days, on the high, you know, maybe 60 days, depending on the type of loan. On a rehab loan, you could easily be at 90, 120 days. I'm dealing with one right now that I've been dealing with for 6 months. And this lady, I'm adamant to get her to the closing table, and she's got a couple hiccups that are not her fault, but these are the things that add up. So my question to you, Kevin, is this. I'll just buy, my mindset is I'm listening to this, you know what, I'm not going to buy that $150,000 property. I'm going to go ahead and buy that foreclosed property or that distressed property and fix it up. Is that just a pretty straightforward situation? What do I need to look out for? Can I waive the inspection process? Do I have to do it? Go ahead and answer.
Yeah. No, I think that's a really good question, because, you know, the one facet is people buy turnkey properties and it's nice and easy, 30 days, clean, if everything's good. And then the other side of it is that, you know, people hear I don't want to say a myth, but they hear the sirens call almost of a $30,000 property. You know, you could buy it, no mortgage. You know, maybe you can get like a loan from a family member. You can pay cash. It's like pretty much straight through the finish line. And, you know, you can make it turnkey because you can kind of fix it as you go along. But you know, so I guess the first question is, do you need an inspection? So I would say yes. And obviously, like, you know, I say yes because that's what I do. But I think the other side of the coin is I say yes because I'm an objective eye. So like a lot of times people, they think when you hire an inspector, you know, obviously you're going to look at some things, check some things out. I'm going to tell you a couple of things, you get a report. But honestly, it's the third party, you know, neutral view of things. Because I have no issue with contractors. I have a lot of contractor friends. I refer a lot of contractors. But my thing about it is that contractors, in my opinion, are not always neutral. You know what I mean? Like when someone pays me a fee, just say they pay me $400 or whatever the number is, they're paying me to give them a non-biased review. You know, the roof is bad. The roof is bad. I don't get paid to fix a roof. I don't get paid to you know, fix whatever the problem is. I just tell you like it is, and then you take it where you want to take it. But if you know, let's just say hypothetically speaking, if somebody's, you know, brother or uncle, I call him Uncle Bob or Uncle Jim, you know what I mean? Everybody has an Uncle Jim in the family. So they hire Uncle Jim, and Uncle Jim says, okay, yeah, you know, let's get this $30,000 property. I'll take care of you, whatever have you. Uncle Jim is gonna start salivating because he can do all this work to this property. And he's not gonna tell you, oh, you know, you don't have to do, you know, the foundation repair today. Oh, you have to do it. Or this deck isn't built to code, or you gotta do it. You know what I mean? So for me, it's just like, I say yes, because I'm kind of the intermediary in the middle, you know what I mean? To kind of like say, okay, all right, that foundation, you don't got to fix today. You can parge it. That roof, you got to fix today because, you know what I mean? It's leaking. So I kind of break down the process and the steps. So we got that. So I say yes. And then the other thing about it is that, you know, what's your risk tolerance? You know what I mean? And I think I say that pretty liberally because I've done some foreclosures to where, you know, the person was out of state. They see pictures on Zillow. I come to the scene. I start kind of dropping some knowledge, telling them, okay, this roof is bad. You need more supports, da-da-da-da. And they're like, all right, how much is your fee to stop right now? Because I want to stop. I don't even want to keep going because this is not what the pictures look like, you know? So we got that. And then the other side of the coin is okay, we're doing that. But then at the same time, you know, how much are you willing to put into the property? You know what I mean? Like, what's the after repair value? Obviously, that doesn't have nothing to do with me, but it's like sometimes people, they get into it and they don't really have a plan. You got to have a plan of action when you're buying this property of what you're going to do with it and how you're going to break down the money. And again, if that's, working with Mel saying, okay, we're going to have a loan, we're going to have all these things going on here, but you got to have a plan of action. You can't just, buy this property and then slow piece by piece make it work, because I've seen people where they bought the property and I've just checked in with them and said, how's it going? They haven't even moved in yet. They still repairing it, still fixing it up. So it's a lot of things, but I think in conclusion, yes, you want an inspection. And the other side of the thing is, what's your plan with the property?
Well said. Thank you. Thank you.
Can I add to that real quick?
Yeah.
And just because, again, we was talking about being transparent. A lot of times people who are looking to buy that $30,000 house or $40,000 house are looking to do it to save money. And it ends up being more costly going the renovation loan route, just for that first time home buyer who thinks, because a lot of times like, yeah, I want to buy a $30,000 home. Do you guys do renovation loans? And you end up spending a lot of money because you're technically getting two loans in one mortgage. So there is more costs, there is more fees, there's more people involved. So it does end up being a little bit more expensive if you are that buyer who does want to, renovate your first home and, buy it and fix it up yourself. It does end up being a more expensive mortgage if that's the route you decide to go.
Thank you. I first and foremost, guys, I thank you so much we're hitting that hour mark. I can't thank you guys enough for taking the time out of your day to just jump on here and, drop some knowledge and share. If we could just go around real quick, the best way for, if you've got one quick tip, great, shoot it out. And then the best way for people to find you, whether it be text, email, whatever, what's that one best way? Mel, go.
Mel Mayhew, Sunmark. You can find me on Facebook, Instagram, Snapchat, TikTok. You can find me anywhere. Hashtag Team Mel, and you'll find all my content. And quick tip, first time homer buyer, buy a two-family. Buy a two-family. It's the smartest thing you can do.
Excellent. Thank you. Rashia, you next.
You can find us at wallaceturnerlaw.com. Check out our website. Also, we are Facebook. We work non-traditional hours 24/7 because you never know when you're going to have a problem. And my tip would be I guess, regarding legal advice, make sure you have an attorney in your corner. Don't wait to the end when you don't have a choice.
That's a whole fact.
Make sure it's a real estate attorney. Not just any attorney.
I would say that too.
Yeah.
We laugh because we all can think of a story or
yeah,
three,
we all
right?
got a story.
We all got a story.
That family
All
attorney.
Hey, I'm in family court a lot, Mel.
Alexandria, you're next.
You can reach me by Facebook or check out our website, www.betterneighborhoods.org. We have two local offices in Schenectady, 120 Eamon Street or 1677 Van Rankin Street. And my tip to you is utilize your housing counselor. I am the plug. I am your one-stop resource center. I'm connected to every professional here on this panel today. So please utilize my services. They're free. I'm here to help, to guide, and to educate you on the process.
Say that it's free one more time.
It's free. Alexandria and I did an interview and it's on the YouTube channel, so go check it out. Alex, thank you so much. Alex, you're up.
Yes. So you can find me, I think all my contact info is on the flyer, text, email, whatever is easiest. Also alexwpin@northwestern.com. They always say knowledge is free, bring your own container, right? So I appreciate all of you for being on this call and sharing some info. My quick tip, I think the easiest way to keep yourself safe in terms of budgeting is, we call it the 60-20-20 rule. So 60% of your income should be covering your fixed expenses, things like your rent or mortgage, car payment, things that are set bills every single month. 20% in my world should be going towards retirement and future goals. That's to making sure that you're taking care of yourself 20, 30 years down the road. And then 20% can be used for discretionary, so food, fun money, going out, everything else that you want to spend money on. That's the best tip to kind of keep you safe and in the right spot financially, not living outside of your means.
So I gotta thank you, Alex. I got a bias for Alex. Alex and his wife, Allison, are my financial planners personally. I love them to death. So I can't tell you the amount of stress that they've taken off my shoulders. Just not so much for me, but for my family. That's what's important to me. So, you know, they've got this crazy slide. Ask them to show it to you. They've got this slide that shows you if you delay your savings for your future as you get older, like they go from 20s to 30s to 40s, the amount of money that you've got to save to make up for the money that you didn't save in the past, that's an ugly slide. So, you know, that's an ugly slide. It really puts you puts things in perspective. So thanks, Alex. I appreciate it. Sean, you're up, sir.
Yeah, so thanks again, Lorenzo. So we can be reached at moodyconsulting.com. Email is moodybluesconsulting@gmail.com. We're on all of the social media sites, Facebook, Instagram, LinkedIn. And as far as tip, again, what I said, I'll repeat it. Check your credit reports regularly. That goes without saying. And then secondly, with credit, all debt is not measured equally. And so with installment, you've got your installment loan debt and you've got your credit cards. If you're going to focus on debt to pay down, work on the credit cards because you want to protect your cash flow. So I've had people ask me, should I pay off a car loan or pay off a credit card? Work on the credit card debt. With loans, it's about paying on time. Thanks.
Thanks, Sean, man. Appreciate it. Kevin.
All right. So you can find us at maxwellhomeinspections.com. And like everyone else was saying, you know, you can find us on pretty much every social media platform. Maybe not TikTok. I was thinking about starting that. I just need some funny ideas.
Stealing from Mel.
Yep. And my tip is just don't skip the inspection. You think about the inspection, of saving some money, but like pretty much everyone, I think the premise of this whole thing is being prepared. So I think to kind of move in lockstep with that, don't skip the inspection so you can be prepared to prevent issues later on down the road that will cost you more money.
Thank you, Kevin. Last but not least, Lorenzo Murray with Your Home Team. Guys, again, thank you so much. You can find Your Home Team at yourhometeameast.com. That's our website. We're on YouTube. We're doing just a multitude of different videos, and you can go to Your Home Team, hunt with Your Home Team on your YouTube if you search, and you will find us. You can plug into this video and other videos that might be helpful. You can always, 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 always text me, call me, text the team. You can find us. You can connect with us through our website. You can connect with us through Facebook, the platform that you're connecting with us right now. By all means, there's never a time, like Rashia said, I don't know if I'm 24/7. I'm more like probably like 22/7, but still, I'm available. The team's available. We're able to help you out, and that's. I take pride, and as the rest, everybody else in this panel, we take pride when you guys accomplish your goal. Accomplishing your goal means that you're happy, your family's happy, and you're going to go ahead and more than likely refer us to other people that you know and love because you see how sincere we are. So that's who we are. It's in our DNA. So again, thank you guys so much. This is Lorenzo Murray with Your Home Team signing off. Have a great day and the rest of your week. Take care.